Hey, good morning, all my friends. Good morning, good morning. I tell you what, sometimes when your weekend projects are more difficult than your regular weekly work, I'm sore today. Um, built a first of many solar trackers, got it up and running, and widely it's talked about how solar trackers only make about 45% more power. This one first day up, and it wasn't even on all day. Made 70% more power than the static panels I have sitting in the yard. So that's it's gonna be worth it, I think. 70% more power is definitely beneficial. But I walked like, I don't know, something like 15 miles up and down into my field and back up to the house, getting pieces, parts, and tools, and this and that, and carrying panels and putting them up on the ladder. And, um, I think I did, probably almost 1,000 feet of elevation between going down to the field and back up. It's a bunch of work, and dug in electric and all sorts of stuff. So I'm beat up and sore, and I was dog tired. Anyway, welcome everybody. Rob, Goose, Dan, John, Eric, Donald, Rex, Wade, Sarah Lynn. I think that's Anthony, Stephen, Indy, Muku, Sergio, Robert, Ted, Francois, Arturo, Craig, Valerie, Svenborn, Rosalind, Al, Cliff, Marianne, Mark, JB, Ray, Robert, Leah, Amy, Ted, Patrick, Sledge, my man, Peter, Nikki. Hey everybody. And if you're just tuning in, if you're live, you're wondering how to chat, click the button over here, be a subscriber on the channel, and a few seconds later, you can chat with us while we're live. Now, if you're tuning in later when we're no longer live, you have to leave a comment down below. And while you're at it, check out the More button. Links in the description for the roadmap line, which I'll talk more about here as we go along, because I'm going to use it on every chart today. And then also, you might as well hit the bell with a notification so you get reminded when I go live. Hey, Diana, Joseph, Dawn, Gaten. Glad to see everybody. We have a mega week of economic news this week. A mega week, you might say. Got all the big news here. Trying to get the right screen up, and for some reason my auto change buttons are not working. That's cool. Gosh, love it. Let's see. Which one will it work? I have to manually change it here. Let's see. Which one is it? Which one is it? Gosh darn it. This one? Nope. Not that one. This one? Ah, wrong side, but yes. There's the screen only. Nope, not that one. Not that one. Not that. Cool. Oh, oh, there we go. There we go. I found it. For some reason, my button thinger not working. It's frozen, I guess. Anyway, I got like 12 different scenes, and I laid them all, labeled them all like camera with screen, camera with screen 2, camera with screen 3. Very intuitive to know which one to click on. Anyway, hey Kimberly, my favorite subscriber is here. Dun, 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 dun. Not hanging out with my niece today. And so here we go. Economic news. Today is the only like benign day of economic news. Tomorrow, well, tomorrow we get PPI. And this is odd because PPI doesn't historically come out before CPI. Now, when they did this a few months ago, the market went a little crazy because there was kind of a surprise in there. So need to be careful. Something's up. They don't usually report this PPI before CPI. Now, there may be some logical reason for it, but I don't know. Usually CPI comes out before PPI. And on Wednesday, we're going to get that before the market opens. And then Thursday, we get retail sales, we get unemployment claims, we get Empire State Manufacturing, we get Philly Fed, we get all the fun news right here on Thursday. Another exciting day of market moving information. And then on Friday, we get these consumer sentiment, inflation expectations right here after the market opens. We get these building permits right here before the market opens, housing starts. Even though those aren't colored red for Forex, this is forexfactory.com, they do tend to move the markets because this is kind of, these right here are indicative of how the economy's kind of ticking. All right. If there's no housing starts and building permits, that means nobody's building anything. Or if it's like significantly declined, it's affected by interest rates. It's affected by all sorts of things. People investing in expanding their businesses. So if those are down, particularly building permits, that's includes not just housing, but also commercial building permits. And then housing starts is, housing. So if those are down, that's usually a indication that things like Caterpillar are going to be down. And when Caterpillar's down, it trickles through the whole economy. And if this stuff's still under stress, then and these are declining, things are. I mean, we can see we've come down off of this peak in 2022, kind of bounced a little bit, but on a down decline here. When we get a big decline, that's usually indicative of a major problem here. Starting before the actual housing crisis, we saw housing permits dropping off, or building permits dropping off pretty severely. And it dropped all the way down to the abyss here. So, just something it's one of those things I like to keep an eye on, even though, this could be like a bounce on the way down if we go down more. So this is something I usually keep an eye on. This dip back here in COVID, we're getting down there. Like we're approaching COVID levels. Wouldn't take a whole lot more. And that's still, we never got the boom back that we had back here. That's interesting. We'll find out that on Friday. So as far as CPI, PPI, and we'll react to them, but I don't expect much. PPI kind of flat is what I expect. Core month over month. I wish they would give the year over year. This one just kind of hangs. We'll probably get a little dip. Maybe, it's expecting 0.2. Previously, we got 0.4. 0.2 is kind of the baseline expectation right there. Month over month. 0.2% prices increase. It gives us just over 2% inflation if it's, 12 months. Month over month over month. And so if it comes in spicy, we'll probably see a negative reaction because the rate cuts situation will be, can they do them? I don't know. And then CPI, this is more widely recognized as like the inflation number, but Powell likes PCE better, personal consumer expenditures. It's just a different weighting of the components, but neither one of them really count all the things that we actually spend all our money on. So if this thing ticks up, we'll probably we could see a knee-jerk reaction in the markets. Oh no, they can't do rate cuts. So there you go. There you go. And that's what we got coming up this week. That's the big news. So all trading involves a substantial risk of loss past performance, not necessarily indicative of future results. That means I may never get another prediction right again, although that'd be kind of sucky since Epic Predictions is kind of what I do. This presentation intended to be informational, educational, fun, and entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. Don't long them, don't short them, don't trade them. And if you desire personal financial advice, hire and consult a financial advisor. So that means if you want somebody to tell you what to do, what to buy, what to sell, how to do it, that's not what I'm doing. All right? Don't ask me, please. It's been a lot of that the last couple of weeks. I mean, I know the market got scary, but I'm still not going to tell you what to do. And here's the big crux of the matter. If we rally up in here and we get spicy inflation numbers, that could lead us to do this. Be careful. Be careful. Be careful. Right there. Now, rate cuts not necessarily bullish for the market. You know, the market may go higher on some rate cuts, but eventually we're going to have a problem after we do some rate cuts, and there's going to be some sort of economic financial crisis, freak out, drop. Is it here? Is it later on? I mean, if we kick the can down the road, we'll do the correction eventually. And that correction could be this big, or it could be even bigger, all the way down, back down in these levels down here. Yeah, that's where we were in COVID. That was only 4 years ago. We may go correct that all the way back down. We could do a serious correction. I mean, look how far we've come off that COVID low. Look how far we came off the housing crisis low. There's the COVID low. Here's the housing crisis low. Holy guacamole. We could easily come back down and retest the highs from here. Just come test that vicinity. It'd be pretty rough, but it's in the cards. In the cards. So, looking at ES, S&P 500 futures. If you're not familiar, ES1 exclamation point. This is like /ES on a lot of platforms. If your platform supports futures, why do I look at this over the cash index? Because the cash index stopped trading at 4 p.m. on Friday. This actually opened at 6 p.m. yesterday, so we have overnight data. And we're just kind of drifting higher. Not really, no strong conviction so far. Now, the danger zone is right up above us. We're drifting right up toward it. Wednesday, CPI. Dun, 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 dun. Problems. We need to get through this zone. If we stop in the danger zone, especially as we come into CPI, watch out for the big down. We could do a big flush out. This is it's one of those market setups here that scares the crap out of me right here. So, Peter, this is not a request show, just so you know. I do that Tuesdays at 5 p.m. I also have a I'll throw a link in Discord, but I have a request show coming up tomorrow afternoon at noon that you can come visit too. It's a third party. It won't be on YouTube. It'll be on, well, it'll be posted to YouTube, but it'll be on somebody else's channel. So, anyway, I digress. NQ also grinding here. Grinding. Not able to break higher. We're still way far away from the danger zone. So ideally, if these two are kind of like together to Wednesday or by the end of tomorrow, it's a big red flag. Even if they're by the end of the day, it could be a big red flag, especially with the PPI coming out before the CPI. That's weird. It's weird. Doesn't usually happen. And then Russell here, just not showing any kind of, like, while we see ES and NQ drifting higher, this one not. It's just kind of sitting here. Looks a lot like we could actually flush this on down, and 1300 would be the target. However many months it's going to take us to get down there. It's not going to be today's target. Just clarifying. It sounds like the market just opened up. CL. Heard the ring from my other computer. There's the alert starting to fire off. Let's look at that. Potential rally. Oh, looky. Look at this, baby. There it is. I reset my headphones. So this has a 1, 2, 3, 4, and potential to bounce to a 5 right there. So this one has a potential to go from this 29 area up to this 65, 70, 80, possibly even 100 right there. It'd be a 3xer on shares. It'd be pretty good. Potential right there. I do have a bonus trade to throw off at the end of the show, so stick around to the end. I'll show off a bonus trade. And I was like looking down to see how many people are on, and my little screen is blank. Cool. And so back to oil. Back to Earl Black Gold. Interesting situation here. Trying to push above this downtrend of highs. Now we did that over here and then rejected pretty hard. So stay frosty, stay vigilant. We could see this. We came up short of the downside targets here. But if we get above the roadmap line, that's a sign we're going higher. And just above it, that resistance, that prior swing high, we get above the roadmap line, which is right there. It's really hard to see because it's practically a little, I mean, even though it's made up of a couple different EMAs, it's just a little thread at this point right there. If we can get above it, there's the next resistance. We get above that, maybe we're going out to 90 finally, but one day at a time here. One day at a time. Not clear. It's not a high probability setup on oil. So, and GC. If we can break back above the channel here, these highs, break back above, we're going to 2,500, and we're probably going there anyway. And I did load up on some silver. This one has a huge opportunity to catch up in a big way. So watch for that one to break higher in a big way. Big way. Bitcoin just sitting on the roadmap line, and BTC USD right here. We rejected off of the roadmap line. Look, moved up. 1, 2, 3, 4. Pull back down. If it can get the strength and pop out, good. If we can't, we're destined to make a lower low. So be careful. Nothing's bullishly set up there yet. We haven't convinced me. Haven't convinced the market. We haven't convinced the price action. We're going higher yet. And we're still downtrend of the lows. So even if we break above the roadmap line, that 1618, we've got to get above that downtrend of highs that's been going since back in March to get up to these upper targets. Got 78, 82, 94. Now we're starting to talk closer to those 6 figures. Numbers that I've been talking about are the target. I think we're still set to do it. It may take a little longer. It could take us out to October to really get going and break out. Could be November, could be December, somewhere out here. This is 220 days post-halving, right there, roughly. And that may be how long it takes before we can actually break out higher. Ethereum is consolidating down here, nowhere near the roadmap line, and that gives me concern that we might see a bigger dip. Could dip on down here to 2,000, possibly even 1,600. And if we get below that, we could go down into the triple digits. That would be a big bummer right there, but it's possible on the chart right now. Dollar still hovering right down in here. Right on support. If we break down support, break below the low we had last Monday, probably cruising on down. And then the Nike the Japanese stock market showing a little rally today so far, still below the roadmap line. And as that was widely blamed for the liquidations last week, just kind of keep an eye on it right there. Just keeping an eye on it. If we come up to that resistance in the next 2 days and then also start turning down, that may suck our market down too. So just something to keep an eye on right there, at least for now. I'll probably quit watching it after a couple weeks, but right now, still gives me caution, I guess you might say. And I'm not sure that's the right list. Let's see. Let me refresh. Yeah, there we go. Monday. Look at that. Gave you pretty much no opportunity to get in. You would have had to buy on a whim. Open it up. Target right there, 263. Same pattern as always. Sometimes they give you opportunity to get in. Sometimes they don't. And this one may mess around here, pull back a little bit, give you an opportunity to ride in on up for that 263. Lily. Wow, that one fired off. That one's an entry today. Fired off on Friday. Entry. Looking for 1,000. Possibly on up to 1,040, 1,100. Be pretty sweet right there. If you're willing to go for it. ASND. Just sitting on the roadmap line. Biotech pharma, one of those things that doesn't always follow the patterns. So Lilly being a pharmaceutical, it is in that category, but it is among the biggest companies in the land. So it may buck the trend. And looking at infant market cap, Lilly coming in right there, number 13. 790 billion. That's going to be less likely to be knee-jerked around than some of the other micro biotech type stuff and pharmaceuticals. So that one's, look at that. Eli Lilly, bigger than Tesla. Slightly smaller than TSMC. Interesting. And this is just infinite market cap, which is 8marketcap.com if you want to type it in there. And next up, GNLN. Is that a reverse split? It is a reverse split. This is a dumpster fire right there. I'd play the animation, but I cannot because it's being stupid. But right there you go. Right there you go. I hit the target. Yep, it did hit the target. 30-minute target on Inium. Ka-chow. And RVNC. Relevance Therapeutics. This is, okay, so 4 things don't follow my patterns all the time. One of those, low price stuff. 2 of those, anything the FDA of the United States is involved in. Food and Drug Administration, that's like biotechs, pharma, medtech, med specialties, you know, blah, 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 blah. Number 3, China stuff. And number 4, leverage stuff. So those 4 things don't always follow the patterns. There's some exceptions to that. And when I say low price stuff, I mean like equities, like stocks under 10 bucks. Like this one right here. So this one's under 10 bucks and it's a biotech or a pharmaceutical, biotech pharma. And be careful. Key. That's just been sideways for in the 30-minute chart. And not much better on the daily chart. It's got that resistance right there. We're going to have to break above that to go retest the high here. And it looks like a stock that just goes nowhere. So I'm not sure I would get involved in that. DPST. Looking for this to hold the roadmap line here. Turn back higher, break above the 618 and get going higher. This is potentially spicy, but we got that gap down we've got to contend with. Got to get back above that 100 area to going out to 130, 140, 160. Right there. We turned down right at that gap too. And we filled that gap and then rejected right back down to the roadmap line. That's why I look at gaps. They can be very, especially long-term ones that have been out there for a while. When we fill them, we can get a big negative reaction just like that right there. You may be like, well, that was just coincidence that the market just happened to fill the gap and then we got all that bad news on Monday. Funny how it works that way. We actually started turning it down a couple days before. NVDU. This is leveraged NVIDIA. Be careful here. Leverage doesn't always follow the patterns, but this looks like it could be a bounce. 103.90. Could set it up for 170, 190 on the upside. Yeah, you should have bought some. You should have, instead of buying buying like 3 cases of beer, just go buy a share of Lily, and then you hold it for all this time. You'd be sitting pretty happy. Every time you're going to buy 3 cases of beer, you know. Anyway, COHR, if only, right? If only. It's kind of like if you just start with $100,000 in an investment account, as soon as you graduate college, you can retire in 30 years. It's like, yeah, who has $100,000 when you graduate college? Anyway, COHR, going to need to move above that 70 area. See that little consolidation above that 618 to indicate we're going up to 85 or 90 right there. Starbucks is consolidating in the middle. There's the resistance. There's the support. We're just hanging out and no clear anything. Gonna have to break through resistance to indicate we're going higher. And if we don't, we push down below these lows so far that we've got cooking here. There we go. Break down below those lows. Kind of becomes likely we're going to go visit this area right here. It's an extension to the downside. We're already below the reasonable support. So this would not be a 65 would kind of be the minimum. 60 would be an ideal spot and could go as low as 50 down here before we had another big bounce. And we could push down here and retrace and then push down here and retrace and push down here. That could be the way it works until we flush out all the weak hands from Starbucks. Riley. Ooh. Kind of warned that might happen. B. Riley Financial. This company buys out distressed assets, companies, and then they try to flip them around for profit, liquidate, and whatever. And they got caught on a short attack, and it's not looking too good here. Not looking too good. Riley Z, senior notes, getting whacked. Did you know you can trade like senior notes and stuff on? And these are due in 2028. Not looking too good. They're going to pay them. I don't know. FLUT. You know, company goes out of business. They can't pay their notes. And this has just been hanging. It's kind of doing the watermelon seed squeeze situation, but kind of a channel. I guess more of a channel than the watermelon seed squeeze. Just not my favorite type of situation here. Probably going to chug on down in this channel. If we break out, that's the first indication we're going higher. If we break down, watch out below. QCOM. And has potential measure bounce cooking, and a giant upside target for Qualcomm. Cold, we'll just have to go to natural gas. NG1 exclamation point. Look at that. We are measured bouncing so far. Get back above the roadmap line. Calculate. There it goes. Get back above that. Right there. It's an indication we're going back up to $4 on natural gas. So cold is going to get whacked if natural gas rallies. Since this is an ultra short, leverage short natural gas, this will plummet as natural gas rallies. MSTR. We got, man, the roadmap line's being super slow. We got the tag of the roadmap line. This was a higher low slightly, so I would be very cautious here. It is not clean. But if we break back above, if you just go off this high and this low, break back above that 618 at 146, 147-ish, we're cruising on up to possibly 197 and 200 area right up there. We do have the 220, 230, to 300 from the prior pullback back here that was a little bigger than this pullback. So we've kind of got double trouble, confluence of targets cooking right there. Could matter, could possibly not matter. Hawaiian Electric is retraced back to the roadmap. Look, I guessed there, and it got down to there. Imagine that. Some people wonder why. These things come up and they stall out, and then they retrace the roadmap line. That's the way it happens. Like, I don't know. So, Hawaiian Electric, missing on the top, missing on the bottom on their earnings Friday, and gapping down. When and if it pops back up above the 618, probably going on extension 1920, possibly 23, we'll hit that gap down. And yeah, that was a crazy rally. We may need a 618 retrace of that whole thing. Support on down here. If you're chasing Hawaiian Electric and we get below that right there, guess I should put it as a box. It's like a warning zone. We start getting below that, especially below the 786, we're probably going lower low, maybe down to $6 on Hawaiian Electric. Yeah, that's like 50%. Ouch. That's the risk. NVO potentially getting the bounce with Lilly. Seems that Lilly's drugs GLP-1s may be a little better than Nova discs. I don't know. Seems like it kind of do the same thing to me. Breaking above this resistance, this gap down here, sets us up for 152, 156 on the upside for NVO. Best of buy. Oh, look at that. Remove the prior drawings. 1, 2, 3, right into the roadmap line. If we can break back above that 88 area, we're set for 95, 98, possibly 104. And the stop would be down here. And the bonus trade did not print on here. Cool. I'll pull up the chart and pull it over. Oh, I brought one other thing. Where'd it go? Where'd it go? Here we go. Watch out for these today. We had gold, Barrick Mining. After the close today, Wolf. And last week was one of the biggest weeks of earnings we've ever had. And so now we're kind of on the downhill swing, picking up a few more companies here. Wolf on Home Depot, Nucor, or I guess that's New Technologies or whatever. Brinker, Cisco, Walmart, Coherent, Flowers. Smaller companies, but any of these could announce a shocker and move the market. So, especially Walmart over here. Walmart can move the market. Alibaba. Maybe not so important for us, but so watch out for a few of these earnings, especially if you're involved in any of these. If you're trading any of these, watch out for these names this week. Right here. And the bonus trade, HQI. Look at this one right here. So, not a giant upside, only $1 upside. We'll go look at the chart here in a second. And, I mean, it could have fired off. Let's see, HQI. HQI. That high, that low. Yeah, 1462. Where's today's candle? That's weird. Is it halted? That's a weird one. Doesn't have any, no candle for today. That's weird. Anyway. Odd. So, back to it. I have now colored these blue. If you see these blue, they're not Apollo trades. They're something else, experimental. So, HQI. New potential entry. Target's 1455. 88.90. I mean, 88% of the time it's gone higher. So. There was the candle on Friday. That's the same candle we have right now, which is really weird. And 107 trading days is how long this takes, over 9 trades since 2002. But this one looks like it may go a little faster since it only needs 90 cents right there. So there you go. Yeah, that one appears to be halted or something. It's weird. HQI. High request. It doesn't have any flags on it. Let's see. Weird. I don't know. Maybe it's got a weird. So it's not a daily chart. Like says it should be open. It's weird. Oh well, that was my pick for the day. Meta. Let's check in on that one. How we're going. Still got opportunity there. That was one from Thursday. I guess I showed it off Friday. Meta still got nice upside potential. And be careful out there. I'll be in Discord, hanging out on and off the rest of the day. And I'll be back. Same bat time, same bat channel tomorrow morning. Make sure you subscribe. It just kind of threw me off my game when one's like being weird. Anyway, have a great day, everybody. Stay safe out there. Watch out for that resistance on S&P. That's kind of the big. Now, if we pull back right now, if we were to do a nice pullback, find some support, then start breaking up higher, break through this on CPI PPI, that'd be pretty sweet. Then we're probably looking at these upper targets up here. 57, 58, possibly 6,000. That would be pretty freaking nice. I don't personally like crashes. I've been warning about it because we have this set up in the chart right now, and it could flush us all out. So be careful. I'll try to stay on top of it if we do get the setup for flushing us out. But please be careful. Please be careful. It's your money, right? Nobody's going to watch out for you but you. And if you think anybody's got your best interest in mind but you, be careful. Be careful. We'll see you guys tomorrow. Bye for now. Have a great day, everybody.